We need to talk about President Trump's absolutely wild plans for the $20 trillion he claims will be injected into the U.S. economy by the end of 2025. Very short time frame here, Dom. Sounds massive, it sounds bullish, it sounds like money printer go burr on steroids, but when you dig into the numbers, they don't actually mean what you think they mean. It's a nice talking point anyway, but it doesn't mean the news is meaningless. It's actually incredibly significant when you strip away the hype and look at what's actually happening. Trump's economic plans, trade deals, and stimulus hints and other macro tailwinds. There's a lot of stuff going on here, and it's clear that liquidity is coming. It's just a question of when and how much. But let's be crystal clear about where the $20 trillion injection, that whole narrative even started. Because the internet, being the internet, has taken Trump's words and sprinted to the moon, baby. Look, I get it. Everyone's hunting for some kind of hopium here, but we need to break down what this $20 trillion really is. So, Trump's comments come from a White House speech from November 17th, where he reportedly said, by the end of the year, approximately $20 trillion will be invested in our country. And by the way, $18 trillion already agreed on, according to Trump. So the key word here is invested, not printed, not injected as stimulus, not handed out to the public, invested. That creates real jobs, data centers, power plants, all that kind of stuff. What he's actually talking about is total capital flowing into the U.S. economy. That includes foreign direct investment. He's been getting a lot of that, by the way. Seems every time he goes to the Middle East, dude comes back with $1 trillion. Companies relocating production back to the USA. A lot of major U.S. companies are saying, yes, we'll bring more stuff back on shore. Tariff-driven reshoring of supply chains, as well as massive private sector spending on factories, AI chip production, and pharmaceutical plants. And he's rolling all of that up into one big giant marketing number, which is clever. Trump's a marketer. He knows how to do it. Is $20 trillion investment a massive deal? Yes, 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 and yes. It's going to create so many U.S. jobs. This whole jobs crisis we're going through right now, it's going to take a few months, but people are going to start getting hired for good jobs. Now, is all this happening because of tariffs? Well, it's debatable. Okay, is it money printer go burr? Absolutely not, and that's very interesting. It's not going to have this massive inflationary effect where the Fed prints crap tons of money. What Trump has been doing recently is a tour of Asia and Europe to finalize trade deals and agreements. Switzerland agreed to slash tariffs 15% in exchange for $200 billion in U.S. investment over the next few years. Japan's $550 billion investment commitment to the U.S. advanced with projects in AI, critical minerals manufacturing. Korea pledged billions in new U.S. investments, everything from natural gas to Boeing planes. Malaysia, Cambodia, they're all signing deals, removing tariffs on U.S. goods. Saudi prince came to America the other day, and Trump's like, hey, how about that $600 billion you guys were going to invest? Why not make it $1 trillion? Saudi dude's like, all right, let's do $1 trillion then. What? That's crazy. Thailand and Vietnam agreed to frameworks for deeper market access. This is real capital moving to the U.S., strengthening supply chains, creating investment opportunities. America's back, baby. It's not just stimulus bullshit, okay? We are going to get stimulus checks too, but this is more substantive than that. Checks will hit people's pockets at some point, but right now we're seeing this is corporate and government level money investing into the USA, which will create shit tons of new jobs in energy and minerals and mining and data centers and all the rest of it. Combine this with everything we already knew is in the pipeline from the Fed, and suddenly the market looks like it's about to get a serious liquidity boost. So the $20 trillion is more of a distraction because the markets are on the verge of a serious liquidity boost from behind closed doors. So it's the liquidity wave forming underneath. That's the real story. And that is bullish for risk assets. The U.S. economy is continuing to run hot, by the way. Fed now predicts a 4.2% GDP increase in Q4. Bullish. Now, we've debunked the $20 trillion hype. Let's talk about the real money that'll soon be hitting the markets. Before we get into that, guys, insane Black Friday deal for you, okay? If you hold Bitcoin, Solana, Ethereum, any damn crypto assets worth more than a few dollars, you have to get yourselves a hardware wallet. You have to secure your coins. And there's never been a better time to do it because Ledger has got an insane deal for you. You're going to get free Bitcoin. Get yourself a Ledger Stacks right here, one of these bad boys. $80 in free Bitcoin. Grab yourselves one of these, Ledger Flex. $70 in free Bitcoin and 50% off all Ledger Nanos. Link down below. Guys, hacks happen every day. People are after your coins. It's serious shit. If you're not securing your coins with a Ledger wallet, you're not playing the game right. Okay, this is an extremely limited time, insane Black Friday offer. Link down below. Go check it out. Do it now. Thank you very much. Okay, look, guys. While investors are pricing in a lower probability of a Fed rate cut in December, Fed Governor Christopher Waller believes a cut is needed due to labor market weakness. He said, "I'm not worried about inflation accelerating or inflation expectations rising significantly. My focus is on the labor market," and there's been a lot of labor market weakness recently. It is unlikely that any other data in the next few weeks is going to dramatically change the way the Fed looks at all this, okay? So that means another cut is probably coming in December, okay? We're 3 weeks away from the next interest rate cut, likely. I know the prediction markets are saying, probably not gonna happen. They don't have enough data. I think the data is pretty clear, okay? So with a divided Fed and Trump piling on the pressure, there's still a pretty good chance that the next Fed meeting works in our favor and get another interest rate cut. Add in the fact that the Fed will be finally ending quantitative tightening in less than 2 weeks on December 1st, you've got a recipe for sentiment and liquidity starting to ease over the next couple of months. Does it mean we immediately send back to all-time highs? No, not necessarily. Those things take time. Then there's Trump's $2,000 tariff dividend checks, which are coming by mid-2026. Very smart politically, but also injects a lot of money. We're talking hundreds of billions of dollars back into the economy. They're expected to go to low and middle income Americans, and according to Fortune, if implemented, it could be costing $200 billion. Some even say $400 to $600 billion if it mirrors COVID-era stimulus structures. And this is not, again, from the Fed just printing money. This is from money the government collected from tariffs and is handing back out to people. Not bad. That's a lot of cash hitting people's pockets just in time for midterm elections and just in time for them to buy dog coins for an end-of-year rally for crypto. There you go, in 2026, of course. Let's not forget that there's a new Fed chair on the horizon, too, to replace Jerome Powell when his term is up in May next year. Trump will almost certainly be installing a Fed chair who, I don't want to say he's going to be a puppet, but won't fight him, will go along with his program, meaning the Fed in 2026 is likely to be way more aggressive with rate cuts and maybe even fire up the money printers for QE, again, to juice the economy as much as possible, without strictly saying that it's QE, of course. There'll be technical adjustments, guys, not QE. If markets front run this, it'll change the game. Before all of that happens, the Treasury's general account should finally start to offload liquidity back into the economy, which is already starting to happen, tens of billions in the last few days, okay? So we've got all the pieces of the puzzle on the table. Investment deals, trade deals, stimulus checks, lower interest rates, new Fed chair who will be very dovish. But what's it really mean for markets to move into 2026? Well, first, timing always matters. The liquidity wave we've discussed isn't just a one-off spike. None of this is instantaneous rocket fuel for the markets. These are major titanic moves. It's like trying to move a giant ship in a tight circle. It takes time, okay? But a slow burn of liquidity is going to start coming into the end of the year and into the new year, okay? Some form of liquidity injection. They're not going to call it QE, but that's restarting. Rate cuts, investment flows, all this stuff takes months at the markets. You know, all the investment money coming in, data centers don't happen overnight, nuclear power plants aren't built overnight, but the jobs can come sooner than you expect. That's why the final leg of the bull run may still be yet to come, with building momentum through December and into early to mid 2026, rather than a V-shaped recovery. Next, consider risk and uncertainty. The $2,000 dividend checks still need congressional approval. The Supreme Court could throw a spanner into Trump's tariff plans. A lot of things can happen. There's always uncertainty in markets, right? Investment projections from Asia and Europe depend on political and regulatory follow-through. But even with these risks, it seems the direction overall is clear. Will it be perfectly executed? No. But fresh liquidity is coming, which will structurally support risk on assets. And you've got to remember that historically for Bitcoin, its strongest moves happen during periods of extremely easy money, of easing liquidity, of macro tailwinds. And that's been the case recently. We've had too many sellers from OGs, but they're running out of coins. There's definitely a case for 2026 being the year where liquidity finally meets the market. But it won't be instantaneous. But you were never here to be a short-term overnight get-rich guy, were you? You were here for the long haul. You're a long-term investor. Right? Right. Thanks for watching.